Hello, everybody. Welcome back to the Sahemati Account Aggregator Hackathon. Thank you for being here. I have a little bit of housekeeping before we introduce today's guest. So we'd just like to say that first. We are currently planning the sort of judging for the final projects. So if your team is planning to present and take part and you want to actually be eligible for the prizes, we need to know beforehand so we can plan out the judging and get your team a slot in there. So there's a poll which I have shared in the Slack group. I will reshare that poll momentarily in this chat on AirMeet. So please do fill that out. It'll also be on YouTube in case you're watching there. Please do fill out that survey form in case you are participating in the hackathon, and only if you're participating in the hackathon. So with that housekeeping out of the way, I'm very excited to introduce today's speaker and guest, Mr. Rajesh Kumar, Managing Director and CEO of Transunion CIBIL. Prior to his role at CIBIL, Mr. Kumar has spent a lot of time in HDFC Bank, and he is a leader in underwriting, risk, and finance. We are very delighted to have him here. Thank you so much for being with us. Please can we give a warm round of virtual applause for our speaker. Thank you so much for being here. Over to you.
Hi, good evening, everyone. Thank you for having me here, and thank you all for making time to attend this session. So a quick word of introduction. Like Aryaman said, thanks Aryaman for the introduction. So like Aryaman said, I am currently the MD and CEO of TransUnion CIBIL. And prior to this, I was at HDFC Bank for a good 2 decades, where I was the group head for retail credit and risk, and I was mainly responsible for shaping the risk appetite and putting up product programs to the board for risk allocation and approvals to decide how much money to put into which products, which customer segments, which geography across the country. Then I was responsible for the underwriting function, where I led large teams to implement the credit policy that I spoke about, and fraud prevention that always comes as a critical component of any lending business. And to round it all up, I had responsibility to get all that money back. So line collections was a fun aspect of what I did out there. With that brief introduction, I think I shall launch into the presentation that we have put together. Basically, it's a short presentation. I have about 10 slides to walk through. Some of them are more introductory in nature. I'm going to breeze through those. And I will probably spend more time on specific points in a few slides. And then we have kept, there's adequate time for question and answers. So happy to try and answer some of those. And yeah, one caveat before I go into the presentation. It's always a challenge when you talk to a group of people you haven't met, at least personally. And I always worry where do I place the needle in terms of, let's say, the 30,000 feet bird's view, or versus the nuts and bolts, which is the earthworm view. Where do I really place the needle? I am always confused when I talk to people I am yet to meet. So pardon me and bear with me if I err on either side. Right. So with that, I think I will load my presentation. Okay, I hope the screen is visible clearly. So the topic given to me today is to talk about new age lending that the account aggregator ecosystem is going to enable. This is a very interesting topic for me, first of all, because I think a whole lot of the problems that I was trying to solve for over the last 20 years on the other side when I was at the bank are really the kind of answers that we are trying to find through the evolution of this ecosystem. So yeah, before I go into into how we see the lending ecosystem evolve and develop as we go into the future with the AA ecosystem. A couple of slides about TransUnion, which I think are somewhat relevant to the topic as such, topic as well. And I really like this particular slide here, which talks about the purpose as to why we do what we do. And uh, I really believe that purpose is what we exist for. I think this is what wakes me up in the morning versus what ensures whether I go to bed peacefully. So yeah, our purpose really. So TransUnion is a global information and insights company that makes trust possible by ensuring that each consumer is reliably and safely represented in the marketplace. I think it's a very simple sentence, but there's a lot in this, and I love the relevance of our topic today to this statement here, because in the AA ecosystem we are going to talk about a whole lot of information, and I think. Uh, our simple statement of purpose, which is information for good, nicely marries with what we are looking at as we envisage the future, right? This is information for greater economic opportunities, information for greater experience for consumers, and information for a whole lot of personal empowerment. We will talk a little more about some of these as we go into the next few slides. But before that, one more slide on what we do at TransUnion CIBIL. We have a lot of data because we've been the principal bureau in the country for almost 15 years now. So what we do really is to acquire data from the lending institutions. On the consumer bureau side, almost 50% of the new accounts that are opened across the industry are reported on a daily basis. On the commercial bureau side, large members are now submitting data on a weekly basis. And we create insights with this information across the bureau. So you see here the consumer bureau, commercial bureau, ID information, fraud database, legal database, there's a mortgage database, there's a microfinance bureau. So, and you see the numbers around each of these blocks, pretty large numbers. But what do we do with this data? We really match and link data across these different sources and different databases to create the right insights for what we do, which is creating information for good, right? To empower individuals to be rightly and reliably represented in the marketplace. And I think this is even more relevant as we go into the future, because very obviously the pandemic has ensured there's a huge acceleration to digitization and digitalization in every way. So if there are going to be more and more transactions without a personal contact, then I think trust becomes even more important. And that's really what we do. Example of some good insights from matches across these databases, directors from a consumer bureau who are actually people who are individuals in the consumer bureau are also going to be directors in the commercial bureau. Likewise, individuals from consumer bureau with JLGs from microfinance bureau. So a whole lot of such linkages, and matching is what we do very well. We've been doing that for 15 years now. India is a difficult country when it comes to match and merge databases, different databases. Okay, so I'll move on into our topic now. I'm trying to create a pictorial depiction here of how we see the future of lending in India. We're going to break this into a few sections. First, let's talk about sourcing, onboarding, and underwriting, and then about monitoring and collections. Essentially, this is the loan life cycle, right? Sourcing, onboarding, underwriting, monitoring, and collections. So in this diagram here, the yellow lines, are where we see the account aggregators playing a critical role. So you can see a lot of yellow lines here. And I know this is just the beginning. There are going to be many more lines that are going to evolve as we go into the future, with more and more new use cases and more definitions of critical business issues that we are going to be trying to solve. So let me briefly touch upon this diagram here, and then we get into individual pieces here. So first of all, when we talk about sourcing, I think the first and foremost business issue here for us to think about is um, for the industry to introspect and retrospect a little bit. Some of this ecosystem or the availability of a lot of data, not really very new. Yes, the AA ecosystem will be new as an enabler, but given the information available already over the last few years, while a lot of lenders do talk about digital sourcing, digital onboarding, etc., I think the point really to ask, or the question to ask here is, what percentage of the loans that are sourced today are really end to end digital, right? You still have a whole lot of physical channels. The percentage of business that is sourced in the digital world is still very small. It could probably be in the between a 10 and 20%, and yeah, a lot of that, a lot of the digital business still is the assisted onboarding kind of solutions, right? You still have a whole lot of DSAs, you have a whole lot of branches. There are many physical channels even today on the sourcing side. So I think this is one area where the paperless and frictionless opportunities are going to abound. And in this diagram here, the way we see sourcing, you will have engagement engines, but before that, I think the expresses interest in loan, the first point in the diagram, the way I see it, I think the customer will probably just have to say yes, he is interested, and maybe offer two or three fields of information, and then the rest is what this whole diagram will do, right? And in a simple sense, we'll talk a little more about each of these in the subsequent slides, but in a simple sense, as I this loan life cycle, I see a lot of screens disappearing, right? A lot of screens that the customers had to go through or enter data on one hand, or on the other hand, what the lenders would manage. So, in a simple sense, let's talk about step one here. So, let's say I want to apply for a loan, I just express my interest and I provide two or three identifiers, and that should be enough, really, right? Then we go straight into the data repositories, what we call FIPs in this ecosystem, and identification or fraud verification, etc., should really be a lot simpler. I take the simple point that today, if I had to apply for a loan, how many papers do I submit on my ID? And that's funny, right? Because I've had a PAN card since 1995, a driving license since 1989 or even earlier. I have an Aadhaar card since 2015 or 14 or even earlier. I don't remember now. And I've been paying tax for 20 years. I have the same phone number for almost 20, let's say 15 years at least, right? And I keep wondering, why do I still have to keep proving my existence, right? And then I talk about data repositories, right? You look at all these documents I spoke about just now. From a fraud perspective, you can forge a document, but you can't hack into every database and change that information, right? So in the future, the way I see it, I give a couple of identifiers, and then the whole process of KYC, the whole process of authentication, verification, etc., etc. Basically, it's all about confirming that, let's say, Aryaman is the man who he claims to be behind the transaction. That whole process takes up significant time today. It takes up a lot of cost today. That whole process should literally disappear. It should happen in the background, and it should take a few seconds, because we are going to be able to work on so many curated databases, right? When we talk about FIPs, we are talking about asset data coming in through bank accounts, mutual funds, demat, insurance. This list is only going to keep on growing, right? We're talking about the effort to get GSTN data, Form 26As, utility payments, and obviously the credit bureaus. So through all these information providers, a whole lot of this effort should go away, right? And then when you talk about the lending institution, right? the consent, etc., will be managed outside. So for them, it's really about moving pretty rapidly towards a go no go decision, which we'll talk about in subsequent slides again. And yeah, actually, I think I'll probably move on to the next slide. We'll cover some of these, yeah, as we go by. Yeah. So on sourcing and onboarding. When we talk about the future of lending, I think some key process features, the like I mentioned earlier, all these branches and DSAs, etc., that percentage is going to gradually start coming down, and there are going to be more and more digital partners in this ecosystem, LSPs as we call them, right? The e-com players, the digital aggregators, right? And we'll see some use cases too as I go ahead, but there are going to be some of these key process features. And I think the critical business issues for lenders, seamless onboarding, right, where end to end it's all digital, and like I said earlier, maybe one or two screens, not the number of screens that the whole process that goes through. um, Search and match and pre-fills. This is something I it's one of my favorites really in terms of use cases that we see as future opportunities. I think for years the industry has dealt with blank application forms. Nobody ever fills application forms, right? People just put a signature and give it away, and then it's filled elsewhere, and then data is entered into systems, very clumsy and very a clunky process in itself, apart from accuracy issues. Most of the reworks that happen in the lending business are really due to errors in data capture to begin with. And that's funny, right? When we have so much data as a country, so many data repositories, why do we go through this whole process at all? And so I think pre-fill. I just want to give a couple of identifiers, and I want a screen to appear in front of me which has all the application form details, which has been already filled up, and I just need to give a confirmation that yes, this information is accurate indeed. Right? That will happen through the search and match, etc., across different databases. And I think when we talk about the digital partners, the when we talk about digital partners, when we talk about sourcing of the physical world, there is going to be a lot of opportunity to pre-screen a whole lot of customers. So if my information, sorry, if my information is easily available across the databases, and I've given the right consents, and obviously all of what we say will be layered with the right definitions from a privacy perspective or the consent architecture. Let's kind of take that as a given. So pre-screen is going to be a huge opportunity in itself. Why should I even go through this process each time? Most of the eligible customers should be pre-screened and told that they are already approved for loans, right? And then when we talk about offers hub, I'm sure we all know by now that checkout financing is a new use case, right? Seller financing is another huge use case. Buy now, pay later is something that I find very exciting as a concept, right? We've seen in the lending industry for the last 20 years, most of the products are still the same auto loans, car loans, auto loans, home loans, credit card, personal loans, two-wheeler loans. They are the same, right? Buy now, pay later, or checkout financing creates a whole lot of exciting new cash flow based or flow based lending opportunities, right? And I think the beauty about this is that the ability to scale businesses is very vast. You don't have to spend years building those physical channels of distribution. Um, I think I will probably move on to underwriting. So underwriting is one area I think that really gets a lot of visibility when we talk about future models. I'll probably focus on two, three key changes that I see happening. Um, First and foremost, I think the effort of underwriting really is twofold, right? You want to authenticate, verify, confirm who the person is, as I mentioned earlier. And the second thing is you want to authorize, or you want to take the final lending decision, right? Authorization is the terminology we use in cards, and the decision, lending decision, is what we say in the lending business, the loans business. So you look at underwriting as two uh, basically efforts to do these two things: authenticate and authorize. So authenticate we spoke about. When it comes to authorizing or approving the transaction or a loan, right? It's the effort really is to accurately estimate the probability of default, right? That's really what you're trying to do. You're giving out money. You want to be sure that you understand the probability of default in that loan. So how objective can you be in your risk assessment, right? Typically this objectivity, the way I see how we are going to create this objectivity as we go forward, I see a whole lot of I see a lot of rapid evolution into the world of algorithmic underwriting. I see um, workflow solutions merging with business rules engines. They're not going to be two different worlds in the future. The workflow solutions are going to merge with business rules engines, where there are going to be a number of algorithms and many scorecards, right? Which all act signal or the traffic light to monitor and manage, not monitor, to manage the flow of. And why do I say that? You really look at this authorization or the approval for a lending decision. What really is it? You study the available set of information to estimate the probability of default, right? It's really about processing that information. And how do we process the information today? It goes through a workflow solution, and there are business rules engines, right? And in the future world, if the two were to merge with a lot of algorithms and many different scorecards, and your end result really is the estimate of PD, as I mentioned earlier, the changes that I see, a lot more usage of trended data. Today, a lot of it is still a point in time data. So, a whole lot of trended data, more recent data, right? Where analytical engines just kind of totally dissect and slice and dice this information in every possible way, throw it into scorecards, and arrive at the real-time acquisition, which means really real-time approvals for a seamless customer experience. So it's a. I think this is one area which is already evolving, but I would still think there's a lot of headroom to work some of these future opportunities. Moving on into portfolio monitoring and collections, I think portfolio monitoring is another area where I see more headroom, because I don't think we have fully capitalized yet on all the possibilities. When we talk about dynamic portfolio monitoring, the interesting aspect here for me is that when you acquire a loan, you're trying to estimate the probability of default, right? That's a PD. And as the loan is onboarded and booked, let's say a few months down the line, the borrower defaults on the loan. And this is where the probability of default, let's assume for a minute that the probability of default was 1.5% when the loan was approved. A few months down the line, when the customer defaults, guess what? Now it's actually, it is actual default. It's not probability anymore, and so that number changed from 1.5 to 100 suddenly, right? And that's what I mean here when I say proactive monitoring or early warning signals, right? When the account transits from a probability of default to actual default, do we know enough about what's happening in that account, right? And we say portfolio monitoring because once the loans are booked, once you underwrite the loan, then it's a huge number of loans which we call the portfolio. How do you monitor the portfolio? How do you create the right early warning signals? How do you create the right alerts for you to have a much better line of sight on defaults, right? How do we see the AA ecosystem facilitating this? I think the key really is that today, once the loan is booked, visibility is pretty much limited to a bank statement if the borrower has a bank account with the same bank. Otherwise, all you know is about the repayment really in the loan account, right? With the AA ecosystem, as I had in my first diagram, we can ensure a continuous flow of data, obviously again with the right consent in place, where we can monitor the accounts. think GST for commercial lending. It will tell you clearly how the business is flowing in terms of supply chain and also invoices on both sides, on the supplier side or on the buyer side. In the case of individuals, form 26 AS, for example, or just bank statement, etc. If we periodically get a view on those and create the right algos and scores to study the transition of risk, and therefore create the right early warning signals, I think it'll go a long way. That's on the risk side. But I think it's also a very huge opportunity to harvest this ecosystem and all that I spoke about on the business side, because I think every lender today wants to first of all farm his existing portfolio, right, for cross sell and upsell. Even if there's a 2, 3, 5, 6, 7, 8% default, you still have the remaining 80, 90% of the portfolio, and customers where you want to increase your share of wallet. And how do you do that? You want to design aggressive cross sell and upsell policies, right? And I think that's another huge use case I see when we talk about portfolio monitoring. I think with this, I will probably move to the next slide, which is to kind of shift for a minute to MSMEs, more so in this pandemic. I know all of us are reading and hearing a lot about the government's efforts, and a whole lot of others trying to create the right uh, support for MSMEs. We know they are the backbones for the growth and revival of the economy, and it's important for us to see how we can help that segment. And I think talking about MSMEs, if I were to take a minute stating the real problem, right? Why do lenders hesitate to lend to MSMEs? Why is there a very little progress in terms of evolution in the last 2, 3 years in this whole business of lending to MSMEs? I think the first and foremost problem really is that when it comes to MSMEs, we can go back to my first slide actually, a reliable representation that creates trust. I think with MSMEs, that exactly is the problem. With MSMEs, we don't have reliable data today. Very often you see outdated financials. They're not really reliable at all. There's a whole lot of tax evasion that goes into play in the way those financials are created. I think with the ecosystem that we're talking about, there can be much more visibility into more reliable data. GST was one example. The ESI data, the PF filings, etc., etc. Right. So to that extent, I think we can solve for a lot of these problems where we can bring in more digitalization into this lending ecosystem. We can reduce the time it takes because the information is not reliable. The industry takes much more time. Today, consumer loans are still given out in few seconds, few hours, a day or two, but MSME loans still take many days. So I think clearly this is one area where I see a lot of headroom and many problems to solve for with the evolving ecosystem. Going on to my last slide, I think the evolving ecosystem will really benefit borrowers as well as lenders. All that we spoke about so far, I'm going to spend a minute talking about how we really articulate the benefits for the consumers or MSMEs on one side and the lenders on the other side. Like we said earlier, I think clearly for the consumers, they can be better represented. They can pay interest rates commensurate with the risk, right? We spoke about personal empowerment. Today, risk-based pricing is a concept which the industry has tried to develop and evolve, but I think there's a lot of work to do on risk-based pricing. Individuals can today get more customized offerings. Everybody has the standard 12 months, 24 months, 36-month loans, 2 lakhs, 3 lakhs, etc. I know the fintech world has changed that quite a bit now. More specific use cases and more flexible terms of the loan, right? Loan amounts that are really the exact loan amount required for a specific purpose, and tenor and installments. Today we talk about repayment in 15 days, repayment, etc., etc. The flexibility there, and obviously a lot more instant gratification because of such rapid and swift approvals. For the lenders, clearly turnaround time is going to come down, which means their costs will reduce significantly. The productivity of employees will improve significantly again. Sourcing channels, as we mentioned earlier, much wider funnel for sourcing, and portfolio monitoring, collections, etc. Are much more dynamic in the way they manage their portfolios, much better business opportunities, and reduce credit costs in terms of provisions for bad loans, etc. So that's really the few slides that we had put together in terms of how we see the future of the new age lending. Before I go off the PPT, I had this one slide which I thought I will take a minute. I think some things to keep in mind as you guys develop solutions for lending in this ecosystem. I think it's as important to work the device data as we uh, work the borrower's identity information. I think it's a no-brainer that our identities are by now well merged with device identities, right? And then the second point really about making solutions which are compatible with both high frequency digital data, ad flow, and also the slow moving data, right? Remember that all of this evolution is not going to happen from 0 to 1 immediately. This evolution will take some time, so our solutions will have to be compatible to both of these. If we lean in and create solutions, if we lean in too much to the high frequency digital data today, a lot of those players won't be able to shift immediately. So we will have to kind of ensure that we help all parts of the ecosystem move and take care of that, because the pace is not going to be the same. Then thirdly, obviously, I've been a risk manager better part of my life, and I've always struggled with this equation between convenience and user experience versus risk protocols, right? Many a times we lean in too much on one side and kind of mess up with the other. It is a tough balance indeed, but important to know both sides to it, be it user experience and convenience or the risk management standards. Lastly, I think as we focus on enhancing end customer experience, we also have to keep in mind that we're designing as much for the risk managers and the operation teams in the lending companies, lending institutions, because those guys still have to manage the business. So we have to worry about their experience as much. I think with that, I am done with what we put together in these 10 slides, and I can probably stop sharing.
Wow, thank you so much for that, Rajesh. If you guys in the audience enjoyed that as much as I did, then please show your appreciation through the emojis. So all those are for you, Rajesh. I think it was an unbelievable talk. Really,
Thank
really
you.
great.
Yeah.
I'd like to just take a minute to summarize it before jumping into some thoughts that I had and questions from the audience. So you spoke about the future of user experience through account aggregators. Onboarding will become seamless. There'll be an offers hub where you'll be able to do one-to-end connections. So easily being able to kind of get multiple offers and reach out to multiple different kinds of borrowers as well. Pre-screening leads, smart leads. He spoke about the future of underwriting, where there'll be multiple sort of risk scores and workflows will merge with business rules engines. You spoke about how recent data and trended data will be captured as opposed to just a static point in time snapshot of the borrower. On portfolio monitoring, you said that you know it'll be easy to cross sell and upsell. Not easy to do that, but easy to spot the opportunities perhaps because one is more in tune with what the borrower's current financial health is and needs are. There'll be early warning signals and real time alerts, improved line of sight on defaults, which in turn will help risk capital optimization. The benefits of the borrowers, which you spoke about, are better rates, customized offerings, flexibility of products, and instant gratification as the decisioning becomes real time and the turnaround time becomes very quick. For the lender, the benefits are quick TAT, lower costs due to a standard of data, as opposed to having multiple different data formats to pass through in individualized templates. There'll be a standardized data format, as well as single data sources which are easier to collate and pull from. There'll be expanded sourcing channels, real time monitoring and collections, and provisioning of credit will therefore get easier for the borrowers. And lastly, you had some amazing takeaways specifically for teams that are looking to build and enter this space. And I thought that was a really great touch to do that for our hackathon teams. So you said that digital ID, which is device ID, is now merging with borrower identity, and it's very important to keep that in mind and to underwrite the device and the device behavior and activity. You said that one must try to build solutions for the whole ecosystem, since some areas and players might move fast with the high frequency data and others might take some time. So you need to build something that's compatible with both the high frequency and the slow data. One must maintain a balance between UX and risk management, which is very important and something I would never have thought of. You said that it's very important to think about the risk manager UX in addition to the customer UX. I think that's a really lovely point. So thank you so much for that. I actually had a few questions which you yourself
Yeah,
answered.
before that, you just made me feel bad. I mean, what I took 30 minutes to express, I think you did a better job in 3 minutes or 2 minutes.
No, no, please. If you disagree and you think that Rajesh's presentation was
No.
perfect as it is, again, to do the emoji button is at the bottom, so please do spam it. Okay, I'm glad somebody does that. So it was really great. I was going to ask you a question about what advice you would give to young teams that are beginning their journey in fintech and specifically in lending. Many people seem to think that you can just turn lending on and it can become a feature in any kind of app, and underwriting may could it's not that difficult. You can just sort of figure it out. So you've given some very practical, great advice about ways to think about it. But what would you tell these teams that are thinking about, okay, should I just lend to anybody who looks okay? What's a reasonable sample size to build up before I actually start disbursing? Do you have any tips for newbies?
For sure. I think the first point I would like to make really is that, and I've been meeting a lot of young companies in this field, and one thought that I can't shake away is the overconfidence sometimes when it comes to the risk management aspect of lending. Right, we can create the right ecosystem, right? Be it very convenient apps and all that we spoke about last half an hour. But I think when it comes to lending, it's really a business of risk.
Hmm.
I think young companies should never forget that. Right? We're talking about money, and I can tell you I've done this for all my life. You give money to the wrong guy, it's not coming back. Right, and we have to remember that as we work on return on capital, you have to first of all ensure return of capital, right? So the first point I would like to make is that never forget that lending is a business of risk. All that we speak about aids that.
Hmm. Hmm, hmm.
Right? Very often I see people getting overconfident with the capabilities on the tech side, and clearly the two are different. One is an enabler, one is the core of the business, right? Yeah, so that's the first point. And I think in terms of actual building of models, etc., sample size, etc., I think the my learning over the years is that there is never going to be one right model, right? It's always going to be about individual lenders business model and the risk philosophy. So to that extent it's always going to be an iterative process, right? So I would always when I launch a product or when I go into new geography, the first principle really is to wet your feet, right?
Hmm.
Be very slow in the initial few months, be very cautious, get the learnings in, get the required data, but then remember that this set of data in itself is not what you're going to build the future on, but it should be enough to learn from, and then start building the models. It's not going to be a simple answer, but very iterative. But the good news is that if you do the initial part right, then the scaling up is going to be so much easier than
Makes a
the
lot
other way around.
Makes a lot of sense. Thank you for that. Coming to the account aggregator and the bureaus, in one of your slides, in the slide with the diagram, you showed one of the data sources potentially being a bureau, and that's something which one of our audience members has actually asked in a question. So I'll just ask his question. Ravinder Khokar from HDFC Bank has said present guidelines and schema on AA talks about deposit, savings, and investment information, that is assets. Do you foresee liabilities like loan details also getting covered through AAs? And I'll just add a little bit to that question. What role do you see between the bureaus and the AAs? Will they be just consuming data from AAs, giving data? Could you shed light on that?
Hey, hi Ravi. So that's a good question. I think that's an important question um, that I think all of us are trying to ensure we have the right answer. So first things first, on the AA definition, right? Talk about account information, asset information, or liability information. The way I see it, I think we are creating an ecosystem. If this ecosystem is robust, then there is no end to the definition of what data can pass through this, be it liabilities data, be it GST data, be it public utilities data, be it government repositories, etc., etc. Right? It doesn't matter. The
Hmm.
underlying principle very clearly is that as an individual, I own the data that's mine. As long as it's for the right reason, as long as there's the right consent artifact as to why I am okay to share with it, then it's merely about widening the scope, rewriting some of the regulations, and enabling it from a regulatory perspective, right? So for a minute, keeping that aside, in terms of the role of the bureaus, I think clearly I see TransUnion CIBIL as an FIP and also as an FIU, because I think it's very clear that as we see this explosion of data, right? I don't think lenders want to create large teams who can understand this data, who can create the right insights from this data, create the right lending solutions, right? Hire a lot of people who are good in this world and know risk management, etc. So companies like TU Sibyl, we've been doing this for years. You saw that in the purpose slide, right? Our job is to create the right insights and make it easier for both the lenders and the borrowers. So I see our role evolving as both FIPs when we provide the bureau data, and as FIUs when we create those right solutions along with the rest of the ecosystem to help both the consumers and the borrowers. I hope that answers, Ravi.
No, absolutely, and I really like that metaphor of an ecosystem. And I think the bureaus will clearly be a very important pillar in that ecosystem. But there's room for so many players to kind of to work together. So I think that answers it beautifully. Um, on the kind of macro side, where we're talking about making lending easier, making it more efficient. Is there really a need? Is there do borrowers want this? Is there room for this ecosystem to deepen? Is the credit demand as real as some people think it is, from your perspective?
Oh, it sure is. If you ask me, okay, let me answer this differently. If we were to right now ask 100 people on the road, right, do you enjoy the experience of applying for a loan? Right? I'm sure the answer is obvious.
Yeah.
I think, I don't think they're going to say, I love this whole experience of applying for a loan and going through the process. Right? So clearly from there, from the borrower's side, all that we spoke about, uh, I don't see why there is any doubt on the demand from that side. Demand for better products, better services, faster approvals, etc., etc., etc. And sorry, I missed the second part of the question.
So it was more that there may be demand for, let's say, improving the current set of
Okay.
procedures and stuff like that. But is there more? We often hear about this credit gap where there's purportedly more demand for credit than there is supply of credit. Do you
Yeah,
think
yeah.
true? Do you think that our economy has a long way to go? I mean, some statistics people throw around is that GDP to sort of like credit ratios. Do you agree with that? Do you think that the Indian economy can actually sustainably carry more credit going forward, and it will be good for the ecosystem?
Oh, absolutely. So yeah, I think there are the usual data points on credit to GDP, etc. But the one that I would probably, the one reason why I would support that there is going to be a lot of demand is very simply our demographic dividend rate. If you're talking about 40% of our large population who is still below 25 years of age, right? Very clearly, all of them are going to need credit cards, right? As they grow, as they come into the real world out of their college, or including during college, actually, they need credit cards. Then, as they take up jobs, right, they're going to look for a vehicle to get to office. All of us have gone through this, right? And as they settle in, all of them are going to look for car loans, lots of are flow-based loans, right, for everyday needs, right? They're all going to buy homes, or at least aspire to buy homes soon in their as their career settles in, right? So to that extent, just the sheer demographic dividend, I think I would like to believe that when it comes to demand for loans, it's going to be huge. I think the challenge is going to be more about supply, really, right? It's about how lenders have the right confidence and therefore shape their own risk appetites than to be risk averse, actually. And this ecosystem should help solve for that problem. How we help the lenders understand and define their own risk appetite much better than they're able to today.
Hmm. So we have a few questions coming in. I'd like to just remind the audience that's watching this that you can enter your questions on the right-hand side. There's a button that says questions. So please put your questions for Rajesh in there, and then we'll ask them. So in the interim, we've got one question from Mahesh Govind of DigiLedge, where he asks, "How serious are Indian lenders about alternative data? As a credit scoring organization, are you looking at alternative data models?"
Absolutely. I think first of all, from the lender's perspective, they have no real views or opinions on alternative data. Their only concern really is, are we sufficiently taking care of the privacy, the regulatory definitions on privacy, right? And if that's taken care of with the right consent architecture, right? If there is no problem in the way that information is brought in, right? Then between traditional data and alternative data, I don't see lenders really wanting to differentiate that too much from their perspective. A. B, like I mentioned earlier, all that lenders want to do is to manage risk in their business, right? So if alternative data, which obviously helps them more accurately manage that risk, be it probability of default or managing their portfolios, why not? Why not? And clearly, alternative data will give that lift into their models over time because it's more recent and more real, right? And in many sense, alternative data is also going to bring to the fore many behavioral aspects that are today not seen when it's all paper-led kind of an information. A lot of behavioral aspects, like when we talk about GST, is a business entity even regular in filing GST? That's a very important behavioral aspect, right? So
Absolutely.
yeah, surely. I mean, I see no doubt at all.
So I would like to ask you a little bit about the macro picture. Clearly, the country has been through a very turbulent time. The world has, and from our sort of economic perspective, there have been some ups and downs, and of course, the Reserve Bank has stepped in. So I'd like to ask you, from your vantage point at the center of this sort of this industry, how have you seen in the past few months? Is behavior sort of coming demand coming back? Are lenders becoming more? Are they beginning to lend again? How do you see the ecosystem?
Yeah, I'm watching these numbers daily, I remember, right? So I think first of all, the April month was pretty bad. Obviously, I think the whole country was under a shock. The forced, very strictly enforced lockdown. Obviously, I think April was completely frozen when we talk about demand. The industry level inquiries were down by 85%. We were at 10 to 15% of the pre-COVID volume. So April literally was a washout. But May improved some. By May, we had come back to about 25 to 30%. But the good news is, I think from July 1st, when there was partial reopening, we are now at about between 60 and 70% of the pre-COVID levels. But I think the key trend that we are observing now is that as the infection or the numbers on the infection move in ebbs and flows, that's leading to the reopening in fits and starts. Right? It seems an almost inevitable loop just now. I have locations where I hear about much better numbers versus some other locations. You watch those numbers daily, and then I correlate them to our numbers in terms of number of inquiries from that location. You see some improvement, and then suddenly you see an explosion. The number of cases increase, and the lockdown is stricter. And again, I see the inquiries from that location going down. Bangalore is a classical example of this phenomenon in the last few weeks, right? So yeah, to that extent, I think right now we are at 60 to 70% of the pre-COVID volumes. Very difficult to predict. I think everything is so fluid right now. No economist, no epidemiologist, or no president, no CEO can really predict how the future is looking right now. But yeah, let's hope and pray that if the exponentiality to the spread of the virus is under control over time, then A, there's going to be pent up demand, and B, I think credit will be an essential driver to the revival of the economy. So let's hope and pray that happens soon.
Absolutely. Completely agreed. And, we're very hopeful that with this new infrastructure, the account aggregator coming out, we can kind of hasten the pace at which that credit gets to the people who need it, the SMEs and others to really restart the economy. So the numbers that you were sharing, those numbers were reflecting the lender appetite as a proportion of the, let's say regular quote unquote pre-COVID level number of bureau pulls you're getting for data. How about on the borrower side? Was there a wave of defaults as was feared, or was it better than expected, or how did it play out?
That's a good question. Actually, it's been better than expected. So, in fact, I'm very happy to hear from my peers on the banking side, call after call, and we've seen some of the earnings call as well of some of the large players. Call after call, what I'm really hearing is actually positive news. There is some reduction in check bounce for many players in many of the products. They have been surprised by the improvement in the repayments, and yeah, I think hard to uh, complain about a positive development, because I would worry if there were if there was an increase in the delinquencies, that would have further hurt the lender's risk appetite, right? But
Mm-hmm.
luckily, we are seeing some positive trends here. A and B, I think maybe the lenders have done a good job in educating their customers, right, as to how it's important to preserve their credit history on one hand, and on the other hand, I think, or even one other personal hypothesis I've not done any
Sure, sure.
study to confirm this, but I think that there is a little more disposable income than normal times. Nobody's gone on holidays, nobody's gone to movies, nobody's traveled, nobody's been able to visit pubs. I mean, we're all mostly at home. Few people go to office few days a week, etc. We have not shopped. There's nothing much we've done at all except essential services. So to that extent, I think there's a little disposable income right now. But yeah, we probably have to worry a little bit about salary cuts and layoffs, and let's hope that doesn't really play out.
Okay, that was very interesting. Thank you for that. We have two questions now from the audience. Both appear to be from your former colleagues at HDFC. So one from Ravinder Kokar again, where he asks, "Hi Rajesh, considering the fact that there is no regulation as of now mandating the FIPs to submit data, what is the broad time frame you foresee by when any first use case of AA would reach a considerable scale?"
I think probably I'm probably not the best person to answer that. But in terms of first use cases, I know that some are already on the way. In terms of regulatory definitions, I probably wouldn't want to get into that. But surely, it's an evolution that's probably on its way. I don't see how it's going to be very long before this whole ecosystem plays out.
I agree. I can probably shed a little bit of light on the timelines, but I'd like to just share before that a quote that I really like, which I think applies to the situation. So this quote is attributed to Victor Hugo, and it says that nothing is more powerful than a time whose idea has come.
I just can
I think
absolutely.
I think the idea that we need this more efficient infrastructure for actually enabling data sharing and building out better UX for credit and things like that. I think that idea has come. Its time has come. The people who need to buy in, so for example, the banks, the regulators, they've bought in, and it will definitely, nothing is going to stop it, I believe. And from an ecosystem readiness perspective, from what I see, from within iSpirit, is that we have, two, three private sector banks, sorry, who are basically awaiting just the final certification. So I would be very surprised if within the next few weeks you didn't see some significant activity. So I won't go too much more into that, but I would just offer that as a little bit of extra information, and encourage everyone to keep their eye on Sehmati and for any announcements that come in the coming weeks. Um, Thank you for your questions, Ravinder. We have Ronak Daftari from HDFC Bank who also asked, with respect to value additions from an account aggregator, apart from being a pipe between FIU and FIP, what do you think will evolve considering the existing regulations? Where do you think they can add value?
I think account aggregators, their role is well defined. It's really about the rest of the ecosystem which is going to be adding value, right? And I think that's what we really spoke about last, I think, 45 minutes or so. Account aggregators, I think the definition is very clear, and that's what they are gearing up for.
Very well said. Very well said. And we'll be having a number of masterclasses during this hackathon, including on this Friday. We have an open hour session with a few of our mentors. So we have mentors from the tech side, business side, product side, who will be available. And over the course of our masterclasses, we'll be having a few Q&As. So there are legal Q&As happening this Saturday at 3 p.m. And there'll also be sort of ecosystem Q&As, product and business Q&As that you can always do. So we encourage everybody to keep tuning in for all of these sessions like you have today in great numbers. So please do that, and thank you for your questions there. Um, I think it doesn't look like we have any further questions from the audience, but I would just like to say from my end that it's been an absolute pleasure to have this opportunity to speak with you and learn from you. And I'm sure that everybody in the audience thinks the same, and whoever will watch this video later, definitely I think will think the same. A real blessing and a treat. And thank you so much for being here and giving us your time.
Thank you for having me here, and thanks all of you out there. And absolute pleasure and privilege to be talking to you all. And I do hope that I get to meet a lot of you as things settle down. Thank you. Thank you very much.
Privilege is ours, sir, but thank you so much. For everybody else who's on this call, we will be having our next session, as I said, on Friday and Saturday. So all the details will be on the Sehmati website, the link to which I will put in the chat right now. So please do follow that. And yes, thank you so much, everybody.
Thank
Thank
you.
you, Rajesh. Bye
Thank you.
bye.